While many of us are aware that we need to plan for our retirement, the reality is that many of us do not start working on it until it's too late. In fact, a study by the SMU Center for Research on Successful Aging in 2023, it was found that just 34% of Singaporeans aged 53 to 73 rate their retirement preparedness as good, while another 27% do not even have a retirement plan yet. Then how? That's why DBS came out with this latest portfolio, the DBS Retirement digiPortfolio. As the name suggests, this portfolio lets you invest for retirement lor. Duh! But the more interesting thing is that this is Asia's first portfolio that helps you automatically adjust the asset allocation based on your life stage and retirement timeline, as well as complements your retirement income. And this is something that is not commonly found in most of the hybrid human robo-advisors that we have right now. So, in this video, I'll be going through what this portfolio is all about. How does it work? What are its holdings? What are its fees? And who is it suitable for? Also, full disclosure, while this video is produced in collaboration with DBS, rest assured that all the opinions here are entirely my own, and the whole reason I'm making this video is so that you can understand the portfolio a little better, yeah? So, the innovative thing that I was talking about earlier is called the glide path strategy. What it does is that it will automatically adjust the portfolio allocation to make sure your investment suits you through different life stages.
Huh? What do you say?
Let me explain. While everyone wants to grow their investments as fast as possible and what big, the reality is that this doesn't always work all the time. That's because higher growths tend to come with higher risk and higher volatility. This means that equity investments are more suitable for younger investors, because younger investors tend to have a longer investment time horizon. For example, if you're in your 30s and your investments suddenly crash by 50%, obviously, you'll feel a bit sad. But the good thing is that because you are still young, you can slowly dollar cost average in while waiting for your investments to recover. But if you are nearing your retirement and the market suddenly boom and crashes, you'll be like, huh? And be in big trouble, because you just lost a huge chunk of your retirement investments and you don't have much time for your investments to recover. In order to avoid this, many experts will advise you to slowly convert your investments from equities to fixed income as you are nearing your retirement. Because when you are older, your goal for investing is to preserve your wealth versus growing your wealth when you are younger. And here's where the glide path strategy comes in. For example, since I'm in my 30s, the portfolio will first start off with higher growth assets to try to take advantage of the long-term capital appreciation potential. Then, as I get closer to my retirement age, the portfolio will slowly reduce its exposure to equities, while increasing the allocation to more conservative and stable assets, such as fixed income and cash equivalents, which are more stable from BP, yeah? Fun fact, this strategy is actually rather similar to the popular target date funds in the US, where, for example, if you want to retire in 2030, you can choose to invest in the Target Retirement 2030 fund. As the fund nears its target date, it will shift its allocation towards more conservative assets. However, the problem with target date funds is that they are not customizable, whereas the DBS Retirement digiPortfolio can be customized according to your needs and treats each investor as a different individual. For example, maybe you want to retire in your 40s, Can. The portfolio can just adjust its allocation to give you more stability when you retire in your 40s. Or maybe you choose to work a little longer and retire in your 50s, also can. No problem. You are able to change your retirement age at any time, and the portfolio can automatically switch gears for you. Next, let's check out the portfolio holdings. Currently, 65% of my portfolio is in equities, 32% in fixed income, and the remaining 3% is kept as cash to take advantage of market opportunities. This portfolio is created in collaboration with JP Morgan Asset Management. So, as you might expect, all their holdings are JP Morgan funds. The funds are also selected because of their alignment to the Chief Investment Office Strategic Asset Allocation Outlook. For equities, you have an Europe fund, an Asia Growth fund, a US Large Cap fund, a Japan fund, and for fixed income, you have an Emerging Market Bond Fund, a Global Corporate Bond Fund, and a Global Government Bond Fund. These different exposures actually align with the DBS Chief Investment Office Strategic Asset Allocation Breakdown. They are transparent in explaining how the portfolio is constructed via the DBS CIO's quarterly outlook documents, as well as online videos, like how they choose the asset class and the geographic coverage. This is definitely helpful, as it helps me understand and appreciate the portfolio a little better. As for the fees, DBS charges a flat management fee of 0.75% per annum for this portfolio, and you can start investing with as little as 1,000 Singapore dollars. Plus, they are currently running a promotion where from now to 31st December 2024, you will receive management fee rebates on up to 6 months of recurring top-ups to retirement, Save Up, Income, Asia, or Global digiPortfolios. As for the fund level fees, all equity funds have a 1.5% management fee, whereas for the fixed income funds, the management fee range anywhere from 0.4% to 1.15%. So, why would you invest in this portfolio then? The biggest reason would definitely be the glide path strategy. Prior to the DBS Retirement digiPortfolio, whether you are investing with other hybrid human robo-advisor has or just doing DIY investing, as you get closer to your retirement age, you would have to slowly transition your portfolio in preparation for your retirement. That will incur frequent transaction or switching costs. Whereas in the DBS Retirement digiPortfolio, all these are already done automatically for you via the glide path strategy at just a flat 0.75% annual management fee. Furthermore, to make the portfolio more accessible and affordable, investors after their retirement will pay a flat 0.25% per annum instead of 0.75% per annum management fee. I also like the fact that this portfolio is personalized for you based on your retirement age that you input. When you compare this portfolio against other hybrid human robo-advisors portfolios, the other robo-advisors are usually like,
"Nah, here's a portfolio. Now invest,"
without looking at whether it's suitable for your investment horizon or not. What's nice is that you can adjust your retirement age at any time, and the portfolio will automatically adjust itself to fit your investment horizon. Also, here's something which someone doesn't usually think about. When we are still young and healthy, we can of course manage our own investments, right? But what happens when we are old and may have less mental capacity? Will we still be able to manage our investments well? With this portfolio, you will have the glide path strategy as well as a team of investment experts that will continue to professionally manage your investments even after retirement, so that your portfolio remains invested even after you start withdrawing from the portfolio. As a bonus, later this year, investors will also be able to make recurring withdrawals anytime without any additional fees. This is useful, especially if you are a retiree and you wish to automate your drawdowns to meet your retirement income needs. This is again part of the market first offering in which you will be able to have a view of how long your payouts will last. Second, both the DBS and JP Morgan Asset Management investment teams are involved in the portfolio management. Both teams have experience managing bespoke portfolios, and they'll be applying their experience and skills in constructing and managing your investments. For example, from time to time, the DBS investment team will evaluate the macroeconomic and investment environment and provide strategic and tactical asset allocation views. And as mentioned earlier, they are actually quite transparent and will share what their outlook is via their online videos and articles. Then, based on their outlook, they will then tell you how they are going to rebalance the portfolio in order to reduce drawdown while taking advantage of any market opportunities. Next, it's super convenient to invest in this portfolio as it's right within the DBS digibank app itself, which I'm pretty sure most of you will already have. So you don't have to purposely go and download another app just to invest. To invest in it, all you need to do is just tap on Invest, digiPortfolio, Add Portfolio, then scroll down till you see Retire with Assurance. Tap on Explore Portfolios, and you can then start investing already. Besides that, you are free to withdraw from the portfolio anytime as there's no lock-in period or penalties when withdrawing. Last but not least, this is one bonus feature that no other hybrid human robo-advisor has. By investing in the DBS digiPortfolio, you will earn higher interest on your savings in DBS Multiplier. Depending on what your account balances are, you'll get to earn an additional 0.3% to 1.7% interest. But the biggest argument is always, why invest in this portfolio? Why not just DIY? Good question. Obviously, if you know how to invest and you are willing to put in the work to research, monitor, and rebalance your portfolio from time to time, it's almost always better to DIY. Plus, it's cheaper also, yeah? But I think the stats don't lie when it shows that most average investors suck at investing. For example, from 2001 to 2020, when we were experiencing some of the best bull runs ever, the average investor only managed to earn an annualized return of 2.9%, which is like very little, huh? So if you are someone who already knows how to invest, great! Otherwise, if you don't know where to start, or you don't have time to learn how to invest, or maybe because you don't want to manage your own investments and would rather leave it to the experts, in that case, this portfolio makes retirement planning a lot more accessible and may even help you to start planning for your retirement. But whichever the case, the most important thing is to start investing while you are still young. Not just because you will have a longer runway for retirement, but also so that you'll be able to form the discipline to invest regularly and activate the magic of compounding. Anyway, that was a quick intro of the DBS Retirement digiPortfolio. Hopefully, you found it useful. If you are interested to find out more, do check out the links in the description down below. But we will be using it to invest? Do comment down below and let me know. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.